Hi, this is Frank from Altcoin Buzz, and today's video is brought to you by our sponsor Bityard. And in this video I'm going to walk you through a simple but effective strategy which involves the moving averages. What we want to do is we want to get the moving averages set up, which you can do very easily on Bityard. Here you have the 10, the 20, the 50 and the 100. And what you want to do is you want to wait until the 10 crosses over the 20 crosses over the 100 and the 50 and the 50 crosses over the 100. Now, you may have heard of something called the golden cross, and while it's ordinarily the 50 crossing over the 200, it's more generally speaking a smaller moving average crossing over a larger moving average. This strategy essentially is a slightly more sophisticated version of that, which uses a number of moving averages. You can also have the 200 over here if you want even more confirmation of a trend going in a certain direction. But for now, we're going to use the 10, 20, the 50, and the 100. And I'm going to use this vertical line here. I'm just going to get rid of this for a second. I'm going to use this vertical line here to show you guys where you would enter a trade using this strategy. So here you can see that the purple is above the blue is above the green, and the green is above the red line, okay? So what you'd want to do is, at this point, you would want to enter a bullish trade, okay, right here. And then you only exit the trade if the lines have the opposite look, okay? So what do I mean by the opposite look? I mean that the purple is below the blue is below the green, and the green is below the red. So let's walk through these lines and see when that would happen, okay? So if you look carefully here, you will see that that happened right here. So technically, this is where the first exit would have been. So here you would have your exit. So as I said, guys, this is where you would enter on this vertical line at the price which is marked by this horizontal line, and then you would exit over here marked by this vertical line and this horizontal line, and you would have already made a 2% profit. So the thing about the strategy is you can enter long and you can enter short. So you could technically enter short over here. Let's see what would happen if you did that. Personally, I would not recommend entering short here. I think you want to, especially once you get used to trading this, you want to sort of think a little bit outside the box. So, the box is, well, if this is above this is above this is above this, then we enter. But in reality, you really want to see a little bit more space between the lines. So for example, initially we said that we would enter over here, right? So technically this is exactly where the lines cross, but it's possible that the green would still come down a little bit before going up. We didn't know that it was going to move up so quickly. So what you might want to do is wait just a little bit more, and here you can see that the green is well above the red, the blue is well above the green, and the purple is well above the blue. So this is a much stronger entry sign than, for example, this, okay, where there's still not much space. You see the blue and the green line there, they're very tight together, So technically, the blue line has crossed the green line over here, which is a bullish sign, right? But really, there's not much space in between them. You would want to wait until you have some more space in between them, such as here. So let's say, for example, we were to enter a trade here. Again, we have our horizontal line for the entry of this trade. And here, of course, I think we're likely to see an exit of this trade, which is in loss. Okay, but it's important to look at these examples as well. Not that you guys think that this is some flawless strategy which will work every single time. Okay, so let's see what would happen here. We're waiting for the purple to cross below the blue, and that happens over here. So again, guys, this is where you want to sort of think a little bit before exiting the trade. So let me just make this clearer for you guys. We have a vertical line right here, and here you can see the purple is below the blue, and the blue is below the green, and the green is below the red. But as I mentioned before, I would personally want to see, a more space between the lines. So I would want to wait for the blue to get properly below the purple to get properly below the blue, or in other words, the 10 moving average to get properly below the 20. Whereas here we just had a tiny little dip. But if you were to exit here, then of course you would have unfortunately made a loss. But as mentioned previously, you really want to look at when the moving averages are fanning out so that there's proper space between the moving averages to confirm that it really is going in the direction that you're hoping it to go in. Okay, so let's see how this would work on Bitcoin. And again, guys, TradingView offers a lot of these tools which you can see on the left side here. But on Bityard, you can use them for free. You just sign up, and you have the brush, you have your Fibonacci's here, you have a whole bunch of different patterns, Elliott waves. You can enter your long position here, for example, if you want to see what your stop loss is and what profit you're targeting. So pretty nifty exchange here. You got a whole bunch of tools that you can use. So for Bitcoin, let's again zoom out a little bit. We obviously have a big move over here. Let's see over here, right here. You see here, purple below the blue, blue below the green, green below the red. And now I'm going to use the slightly modified version where I really wait for space between the lines. So over here, technically, this is where there's a crossover, right? But if I were entering this trade, I would want to see a little bit more confirmation. So one other thing that you can do is to combine this with lower lows, lower highs. So in other words, a strategy which looks at horizontal price levels. So here you can see we have a relatively important price level which has been struggling to break, which is this 9,100. So what I would do is I would say, okay, well, we have a crossover of the lines, but we are at this support here. And we found support here multiple times. So if we break this support, then I'm going to enter the trade. So what I would have done is I would have waited until that support broken over here, and I would have entered right here, okay? So that would have been at the close of this candle. And here you can also see that there's much more space between these lines, right? So you have a pretty good confirmation that there's the bearish momentum here. And then, considering that we entered at this price point, 9,070, you'd be waiting to see if there's any signs to exit the trade. And what you would notice would be that here is where the purple is above the blue, okay? So do we exit over here? Would you exit this trade here based on this strategy? Well, that wouldn't technically be correct. What you would want to do is you want to wait for the green to grow above the red, okay? So you have these nice multicolored lines to make it easy. And I personally love colors, I had a science teacher back in school who said that colors are good for the brain, and I certainly much prefer using colors than just black and white. And anyway, guys, so back to the strategy. Here you would technically have a crossover to the bullish side. Again, I would personally, I would look at a resistance line over here. I would see that, and I would say, okay, well, if we cross that, or if we get more space between the lines, I would want to exit, okay? So I would wait over here, and here, I would already be very tempted to exit this trade because we have space between the lines. We haven't crossed the previous high of 8,981, but there is certain bullish momentum being indicated by this, and I would probably exit this here. The thing is that, guys, if we entered over here and we exit over here, that would already give us almost 1% profit. So guys, that's the moving average strategy. Let me know if you have any questions about that. Again, you can test this out for yourself on Bityard. Just put in these vertical and horizontal lines, back test it to see where you would enter and where you would exit. And if you sign up with Bityard, we have a link down below in the description. Sign up there, and then you will be able to get a bunch of beginner rewards, which are pretty fun. So you set your username and conduct a demo trade, and you'll already get free money. So that's pretty cool. And let me know, if you've had any success with this strategy or what you think of it, or if you have any questions about this or Bityard, and we'll be sure to get back to you as soon as possible. So this is actually an ad for Bityard, but they have a pretty nifty exchange. They're going to be covering Asia Pacific, Europe, and the USA by the end of 2020 for all of you guys out in the Western countries, as well as the Asia Pacific. But as I said, they're already covering 150 countries, which is pretty impressive. They have most of the top 10 coins, and also other ones like Dash and ETC and TRX. The main trading pair is USDT. They're known for having complex contracts but with simple transactions. So they like to keep things simple but still offer you more sophisticated ways of trading. So for example, they have 20 to 100x leverage, and although I wouldn't recommend especially beginners to start with that type of leverage, it can multiply your profits potentially. Just be careful there, guys, because leverage, it's one of those ways that it's one of those very easy ways to lose money quickly. But otherwise, yeah, let's get started. Well, one more thing actually. They also offer low trading fees, so it's 0.15% to enter a trade, and then you don't even have to pay for closing that trade. So most exchanges will ask you to pay a price for entering as well as closing the trade. So it's a pretty attractive pricing for trading. All right, guys, this is Frank from Altcoin Buzz, and I'll see you in the next one. Bye.